Hello and welcome back to Lipper's Fund Flows Insight. I'm Matthew Lemieux. We're going to be looking at weekly fund flows for the week ended March 27th. We're coming to you a little bit later because of the shortened week and the Easter holiday, but let's take a look back a week and a half really to see what flows did and really was kind of driving those. When we kind of set the stage for this, we know that a lot of the news really circled around Cyprus, right? Not only the period before they had an agreement, and then the period after they had an agreement. Before they had the agreement, the big issue was whether they were going to be able to go into savers, not just regular savers within Cypriot bank accounts, but those in the insured area under $100,000 and what kind of precedents that would set. Then after the weekend, we came out with an agreement. Those savers were not affected, but I think a lot of investors were really somewhat scratching their head trying to kind of read the tea leaves to see what this would mean for the broader Eurozone. And everyone knows that Cyprus is a smaller economy, but what would be the knock-on effects on future ECB bailouts or how other structures for the periphery would look? Here at home, the U.S. investors really seem to kind of shrug off this Cyprus concern, mainly on some news on U.S. home prices, which looked very strong, as well as the preliminary manufacturing data. So we saw the markets really kind of take a little bit of a dip on Monday, and then from Tuesday on, headed upwards. So we'll talk a little bit more about that. Let's talk about how the flows went, though, with all this news going on in the markets. And overall, if we look at the macro groups, the conventional mutual fund business saw about $5.7 billion of net inflows for the week. 2.3 of that going into equity, 2.5 into taxable bond funds. If you looked at municipals, they continue to struggle a little bit with about 40 million in outflows, and money market funds actually saw inflows roughly about $900 million. So really equity and taxable bonds continue to be the story. So let's look at the first part of that story, which is the equity side, which we were talking about for some time now with the year-to-date numbers. Actually, if you look at it this week, $2.3 billion. This is the 12th consecutive week of net inflows for this group. And if you look at the 3-week moving average, we're running at about a $3 billion a week tick. So that's pretty strong. If you look at the breakout, 600 million going into domestic, that's their 6th consecutive week, and about 1.6 billion going into non-domestic, that's their 14th consecutive week of inflows. And that group, the non-domestic, really again being supported by a lot of interest into emerging markets. We saw roughly close to $1 billion going into emerging markets. So equity mutual funds continued to benefit. But let's look at the ETF side, the second side of the coin, which oftentimes has a little bit of a contradictory indicator. And this week is similar. If we actually look at equity ETFs, we saw about 1.5 billion in outflows. And again, this was really driven by big selling in a couple products. You saw SPY about $3 billion out for the week. And we also saw EEM about 1.6 billion out for that group. So there was definitely some selling there out of the general U.S. domestic side and also the emerging market side, but we did see some buying actually in IWM or iShares Russell 2000 product, about $2.3 billion. So there could be a couple different things going on. We're coming to the quarter end, the month end. Some investors may be just taking some profits off. There may be a little bit of concern about Cyprus. A lot of analysts out there are kind of waiting for a correction, but it did seem that some investors may have just been shifting that money and making some more specific bets like on small caps. We also saw some money going into some mid-cap products as well. So buying and selling across the board, but net negative for the week. So let's go on to the taxable bond side. We said about 2.5 billion into this group, and this is the 21st consecutive week of inflows for this group. So really no indicator of any rotation out of equities. Investors continue to feel comfortable as lenders. But what we have seen is a little bit of shift in what that general focus within the taxable bond space has been. And again, if you look at this week, we see bank loan, you call them loan participation or floating rate products, continue to bring in a lot of assets, 1.1 billion in net flows this week. And if you look at the year-to-date numbers for this group, it's actually 13.7 billion year-to-date, which surpasses their total for 2012. So investors really looking at that higher yielding, adjustable rate type product. They're feeling very comfortable with that. We also saw inflows into international and global debt funds, 345 million. And high yield, we saw some outflows, 136 million. Really not a big number. We haven't seen big fluctuations in that group, but investors still kind of feeling cautious about the high yield sector, maybe the pricing or the spreads going on in that area. So let's look at the ETF side on the taxable bond space. A little bit different than the equity side. We actually see that it's somewhat agreeing with what we're seeing on the mutual fund space, about $1.3 billion in inflows this week. The interesting thing, I look at the top 4 and the bottom 4 by flow, is there was more interest in treasury-based products. We saw about $810 million going into treasury-based ETFs. SHV was the big one with $500 million. TLT with 320 million. Obviously, two separate ends of the yield curve there, so investors kind of making bets on what side of the treasury they feel comfortable in. And at the bottom, we see some selling, nothing really big, but it's kind of across the board. Investment grades, credits, and also tips funds we saw outflows for. So investors, I think, kind of scratching their head or not really kind of sure where they want to go in the taxable space. So we're kind of seeing some movements, but there's definitely a little bit of flight to safety with some money going into the treasury products. Third group's going to be municipal debt. As I mentioned, we saw another week of outflows, about 40 million, so it's pretty small, but this is the fourth consecutive week of outflows for municipal. So it seems like investors are just being a little cautious when it comes to municipal debt. If you actually look at the underlying numbers, we saw positive flows into national muni. These are going to be your diversified products, about $50 million. And of that, a subset is $17 million into high yield products. Where we actually saw the outflows was on the single state municipal debt side, about $90 million. And I think that's really dealing with some concern out there on some municipalities and how they're going to be dealing with the perception of future budget cuts, as well as some pension obligations that a lot of investors may be a little bit concerned about them managing. So let's go on to the fourth group, which is money market funds. We saw a big outflow of this group last week, about 25 billion roughly, and we think a lot of that had to do with corporate tax liabilities that had to be taken care of. We actually saw an inflow this week. It was the first in 4 weeks. We've seen inflows into money market funds, roughly $900 million. The interesting thing is that there's kind of two stories here, whether you're on the institutional side or the retail side. Institutionals actually pulled in or injected $3.7 billion into money market funds, while retail pulled out 2.8. So it's really hard to say whether it was month end or quarter end or institutional feeling a little bit more cautious, but it definitely seemed that the retail side continued to pull cash off the sidelines and most likely put it work in riskier assets. So we'll have to see if that continues to go on and how the market goes. So what are we going to be looking for going forward? Really, if you looked at the end of last week on Thursday, which was the end of the month and end of the quarter, both the Dow and S&P closed at all-time highs. So that signal kind of was maybe a good signal for investors. But there was some concerns out there. We see on Monday today, we've seen the markets down a little bit on ISM numbers coming a little bit under anticipation, about 51, which is the expectations were around 54. So kind of a slow day today. Going forward, though, I think a lot of investors are really going to be looking at two things. It's going to be looking at earnings as well as employment numbers. So we'll have to kind of wait to see how those numbers come out before I think we see any kind of signal on change in sentiment or investors continue to put risk on. If you'd like a little bit more information or maybe take a deeper dive on these numbers, you can visit our website. It's www.lipperusfundflows.com. Otherwise, you can join us back here next week where we look at the weekly flows numbers. So once again, I'm Matthew Lemieux, and thank you for joining us.